welcome to HyBiz TV, and this is Sujata. Once again, we are sitting here with Pradeep sir, who is a financial expert. He has more than 15 years of experience in investment, and he is also an asset management expert. And sir, my question today would be that as I have been understanding about mortgage and different types of mortgages from you in this series. So my today's question is, when we want to take loan, when we want to take mortgage, a lot of people, they just take mortgage left, right, center. Their reasons could be, I want to buy a fancy car, a fancy house. What are the criterias and categories that we should keep in our mind before taking or considering to take mortgage?
It's a very, very relevant question, Sujata. Firstly, let me thank you for asking that question. And I want to answer this question by talking about the bigger picture, and then I'll gradually drill down to the different factors that you need to consider while thinking about how much money you should take on a loan. Firstly, we have to understand that the way banks make money is through the income that they generate on the interest that you are paying to the bank. So as long as the higher the amount of money that the bank can loan to an individual, the more profit a bank can make. So, but at the same time, as an individual, just because someone is coming and offering you, sir, why don't you take a mortgage on your home? I'll give you a 30 lakh loan, 50 lakh loan. Why don't you buy something else? Just because someone is offering you, because you have a good credit, does not necessarily mean you should go ahead and take that entire loan. Because at the friends, at the end of the day, you have to realize that it is a liability. It is a liability for you because every month you have an expense, which is the expense of the interest that you need to pay to the bank and also the capital that you need to repay to the bank. I'm not saying taking mortgage loans is bad. I'm only telling you that there are several factors. That's precisely what Sujata was asking, that you need to consider when looking at the quantum or the amount of loans or the mortgages that you should be taking on. Firstly, you should have a very good assessment of what is your current financial situation. When I say current financial situation, what I mean is, what is your income on a monthly level? Of that income, how much, if you are a salaried employee, is there a fixed amount of salary you are getting every month? If you are a business owner, is there a fixed amount of business profit you are making every month? Based on that, you have to make a choice. Suppose you are earning a salary of 10,000 rupees, right? Make sure that the mortgage payments or the EMIs that you have to pay is not more than 2,000 rupees. Because you never know what will happen, right? There's nothing guaranteed in life. Whether it's your job, whether it's your business, anything can happen. COVID is an example. It's a testament to the fact that nothing is guaranteed. The entire world has come to a standstill. But the mortgage payments that you have to make to the banks, you will have to pay, because that is how the economy works. That is how the banking system works. Second, you have to consider what is your future financial situation. Okay, today you might be making 1 lakh rupees in your business every month, 1 crore rupees. Today you might be drawing a salary of 50,000 rupees. But will this scenario continue in the future also, right? Example, if you are an actor, you've made a movie, you've got a remuneration. What about the future? Is there a guarantee that your remuneration is going to continue? If your remuneration is not going to continue, how are you going to meet your commitments on a monthly basis? That is the future financial situation also you will have to consider. Similarly, you have to look at what is the total cost of owning your home? What is the projected future value of your home? Let us say you are buying a house for 10 lakh rupees, right? You have 2 lakh rupees, 8 lakh you want to take from the bank. Tomorrow, if the value of the home is bound to increase to 30 lakh, 40 lakh in maybe the next 3-4 years, probably it's worth taking a mortgage, because the amount of interest that you end up paying will be barely a few lakh rupees, and you end up making a profit, right? So that is also one more important factor. Let us say you're taking a big mortgage loan on your house. You're just using a lot of money to remodel your house, right? All the funds. Tomorrow down the line, if your income generating capacity gets affected and the value of the house does not go up significantly because of the reason that you remodel it, then essentially it's a liability that you're making. So all of those factors, what is the projected future value of the house or the property I'm buying using this loan? That is also one thing you need to consider. Other thing is, what are the interest rates? Okay, if the interest rates are quite low, if you see a scenario where they are continuing to start becoming lesser and lesser, then even if you are taking a mortgage loan, you are at an advantage. because you're getting loan at cheaper rate of interest. But since the inflation is growing, since the property prices are going, you will tend to benefit. But if the interest rates are going to get higher, if the business scenario is such that there is a projection that the interest rates will go up, then you're going to end up paying more and more interest every single month. So that is also one more thing you need to consider. Another major thing is, what is the risk of a drop in your income? Okay, I'm in a stable business, or you are in a stable job. Suddenly, what if the sector itself faces a difficulty? Suppose you are a software engineer working in an IT company. What if the software sector starts seeing a slowdown, and across the companies are cutting down the salaries? If your income drops, will you be able to sustain the mortgage? Because if you are not able to sustain the mortgage, then the bank has the right to sell your property that you have mortgaged to recover its dues. I don't want you to end up in a sorry position because you thought that you'll take a mortgage, you'll buy a property, it'll increase in value, you'll probably be better off with that, right? Nothing wrong with that. Many people do that, but please do consider all of these factors. Also, on an individual level, what is your tolerance to debt, right? Every individual has a different tolerance. Some people are fighters. Okay, so I'm going to work a little extra hard. I'm going to improve my sales skills. I'm going to earn extra money and somehow take care of this mortgage. If that is your attitude, if your risk tolerance to debt is little higher, then you can take slightly higher amount of mortgage. But what if your risk tolerance is low? Right. You are not someone who can put in so much of effort. You are not someone, if there is a stressful situation, you are very good at handling things. Then why do you want to take that risk of going for extra mortgages, right, buying those fancy cars, or spending lavishly on anything for that matter? So right, several other factors, even the economic conditions you need to consider. What if the economic conditions are not that great? I know of people buying expensive cars even during the times of recession. That is purely an example of financial ignorance. During recession, during downturn, you get great opportunities to invest in businesses and to really bring them up, or even properties you will get at a reasonable price. But if you are using without an understanding of the economic climate, if you are taking a big mortgage, spending it on liabilities like cars or any expensive interiors for your house, right, and the economic climate is getting gloomier and gloomier, you're going to be in a bigger trouble. Of course, right, if the economic climate is brighter and you're continuing to make more money, then that's fine. So these all are the factors that you need to consider. One last factor, Sujata, I want to tell all the viewers today is, consider other expenses. Maybe you have a child who's 3 years old. What if they have to start going to school next year? Maybe you have a son who's going into a university next year. Maybe you have a daughter who is going to a different state to study. You'll have to consider all of these factors. What if you have elderly parents whose medical expenses you will have to take care of? What if they are 60, 65 years old? So these are the different factors. In 360 degrees, we will have to analyze all these factors before taking a call on how much mortgage you should take. Because friends, just because someone has called you and they're saying, sir, we are willing to give you 30 lakh loan, 40 lakh loan, mortgage loan, don't go ahead and blindly jump into it. Because if any of these factors plays against you, you are going to be in trouble. Because numbers do not lie, and money always follows financial principles. That is why I say financial education is very, very important for every citizen of this country. Right. I hope I answered your question.
Yes, sir. Yes. So definitely mortgage is a good thing. But as sir said, if you are taking mortgage to increase on your liability, then definitely it is not going to go apart with your financial policies.
One more thing, Sujata, I want to add to your conclusion to this is, even if it's a good mortgage, even if you are using it to buy an asset, please make sure that you are comfortable in clearing the liability, which is the monthly interest and the capital repayment. Suppose you have an income of 1 lakh rupees, but you want to take on a mortgage where your monthly interest payment is 1.2 lakh rupees. Even if you are using it to buy a good property, tomorrow it might become a difficult situation. Tomorrow the bank might foreclose this property. They might sell it if you are unable to pay the EMIs.
Right.
That is why be very, very cautious. It is a double-edged sword. The more cautious you are, the lesser the mortgages you are taking, the better for you.
Right. Thank you, sir. Thank you
Yeah.
for explaining the whole mortgage process.
Absolutely.
So, if you have any questions related to finance, mortgage, investment, stocks, you can ask Pradeep sir on HyBiz TV. Write down your questions in the comment section and subscribe to HyBiz. Thank you for watching.